Hey guys, welcome back to our weekly live event. And this week we're going to go over how to avoid taxes legally. Today was the last day to file your taxes, July 15th, which is the extension date given because of our COVID crisis. Today we're going to go over how to avoid taxes legally, and I'm probably going to answer a lot of credit related questions since the credit bureaus have readjusted the credit scores and has caused many Americans to have a drop on their credit score. On average, I'm hearing about a 30% drop is the average drop for an American today because the credit bureaus readjusted how they assess credit scores. Again, for all the new followers, I'm Pascal Corcus, and I have a background in banking, credit, tax returns, and investing. And I'm here to answer all of your questions. Welcome back to everybody that's here. Got a lot of weekly followers, so Magic Man, what's up, bro? I'm here to answer your questions, help you guys get your finances in order, and move you on to the next level. Bryce says, how do you stay up to date with all of your knowledge? To be honest, I love this stuff. I'm constantly reading and studying and listening to podcasts and reading articles. I'm just constantly absorbing it through the whole day. This is like my hobby. This is my sport. I really enjoy doing it. So I'm always up to date. So like my friends, they always have like ESPN on and they're like watching every single sport that's being played and they know all the stats for all the players. Me, I know the stats for like the business players, investing players. So if you tell me about like what's BlackRock doing and what's Warren Buffett doing and what are all the different Ray Dalio's doing, like what is their thought, what's their strategy, what's their style, I follow that stuff. And it's just like my sports, my thing, that powerlifting and mixed martial arts. So that's how I stay up to things. What's up, Charles? Alex was good. All right. Good to see everybody again. What's up, Malaysia? Good to see you guys. Any suggestions on good reels for future MLO? Rich Dad Poor Dad obviously is a good starter, but then everything from Robert Kiyosaki is good to get you to the next level. There's a bunch of other books he wrote that are more detailed beyond Rich Dad Poor Dad. It was good, guys. All right. Raj has a question. Let's see what he has to ask us today. JJ says, do you know any insurance company in Florida does like if you have 2 rentals and only charge 1 deductible when you file a claim for a roof? Actually, I have 30 different home insurance companies that we work with in my office, so feel free to DM me. And if you have any properties or cars, commercial insurance in Florida, we take care of all that. We also do taxes, bookkeeping, payroll across the country. Hello? Again, insurance. We do insurance in the state of Florida. We do taxes, bookkeeping, and payroll across the country. We have some clients that are international. Feel free to shoot me a DM, and I'm more than happy to have my team work on this for you. Coming very soon, we're going to be doing lending. So 1 to 4 family homes, we'll be doing lending for that very soon. Currently, we do hard money loans and commercial deals. So if you need lending for that as well, let me know. We'll be happy to help you. All right. Jojo. What's up, Jojo? Love you too, man. So guys, thanks for the thumbs up. Thanks for the hearts. I already appreciate the love, guys. Thanks for all the positive comments, the sharing my page, the likes. I really appreciate that. That definitely tells me that you guys value what I'm putting out, and it makes me want to keep on putting out more stuff for you guys. So D-Rod, what's up, D-Rod? Actually, me and D went to middle school together and high school. What's up, D? And I actually had one of my other followers. He said he's going to probably stop. One of my other friends is going to stop on the live. He actually rented. He was a tenant of mine. He's a young guy. He's a barber. He rented from me in Newport Richey, and I let him cut my hair once. And we're talking, and He's talking about the decisions he made, and basically, I was talking about how you need to make the decision that is the best for you, not what you want. And he's like, nah, I do whatever I want. I don't listen to anybody. And, that's the way I do things. I was like, okay, well, how about you tell me how that's worked out for you? How is making your own decisions and not listening to anybody's advice worked out for you? He's like, well, it's got me into Newport Richie, living in a studio. So that's where it's gotten me, which Newport Richie is lower end of town, and he's living in a studio apartment. So basically, he's learned. I realized at that point he was learning, okay, maybe I need to start taking advice. Now he's gotten his life in order. He's doing really well as a barber, and he's trying to take himself to the next level with getting into multi-units and fixing your life financially. So as you guys know, I have a course called Foundations of Personal Finance. If anybody wants to get their life in order, their personal finances in order, this is definitely going to get you to where you need to be. It's going to give you all the knowledge that I had that took me from 0 units to 23 units by the age of 23. So it's a really solid, in-depth educational program. And it goes over credit, tax returns, financing, finding a deal, closing on a deal, and the way an intelligent investor thinks. For anyone that knew me back in the day, they always knew that, the way I thought was different than other people. The way I saw things was different. And as long as you start getting those eyes, you're getting those ears where you can start picking up on these things, you can make the same decisions, Awesome. Alex says, thanks for doing these Q&As. You're welcome, bro. Bob says, you look so smart. Are you stupid? Okay. Cash says, sir, do you have any financial advice for me? I live in India and 18 years old. So one thing advice I would tell everybody is, look, just like playing any sport, football, basketball, baseball, you don't just naturally get good at those sports. You have to put in practice. And if you want to become an investor, you have to practice. So at 14, I started looking at real estate deals and studying them and dissecting them, and how much would it cost if I rented this place out? How much would my mortgage? How much would my taxes be? How much would those expenses be? And I would assess all of that information and come to a conclusion. And after you're doing enough deals, you can start running those deals and getting those answers within minutes and eventually within seconds. So I could literally look at a deal within seconds. I know if it's worth it or not. And I mean, I can literally tell you down in my area, I can tell you down to the street. Yes, no, and done. Like no second guessing, it's over. So when you're that fast and that good, you're going to be like those, athletes that are doing amazing, tricks in their sport. And you're like, how does that person do it? Well, it takes thousands of hours of practice to get that good. So that's what I'd say. Study what you want to do. You want to be an investor. You want to trade stocks, Forex, real estate, whatever you want to do. Just study your market so you can get that good. So D says, love you, man. You're a successful young man and very smart. Thanks, brother. All right. Rana says, hello, sir. I'm relatively new to finances. How do better my knowledge in finances and investment and make money while sleeping? I'll be migrating to Canada soon. I'm an IT technical consultant. So the number one thing is first savings, save your money, because without savings, you can't invest. So first save. From there, you're going to start investing. Initially, you're going to probably invest in, say, stocks or bonds and put money away in that way. After a while, you're going to save up some money, and then you'll be able to invest into like real estate. Me, I did some stocks and bonds, but I bought a lot of silver and like collectibles, and I flipped collectibles. That's some of the way I made my money. So those are a couple of ideas for you, depending on what's your style. So I answered some questions. I'm going to jump up here, and I want to teach a lesson real quick, and then we're going to go back to the Q&A. So today's topic is how to avoid taxes legally. If you were watching on IG, you would have saw that today I had a client, and I reviewed his taxes. He paid in $83,000 in income tax. And after he had his taxes prepared by someone else, he owed an additional $20,000 in income tax. That's $103,000 in income tax. That was over 25% of what he made. And to me, that's sick. That you work and you have to give away over 25% in taxes. Now, everyone says, hey, the rich should pay taxes and so that, and I agree we should all pay our share. But to think that almost like 1/3 is he's paying in taxes. For every hour he works, 20 minutes is worked not for his family, not for his retirement, but to pay taxes. So today I want to go over, here are some suggestions of how I legally and how many real estate investors legally avoid taxes. So I'm going to go to the board and we'll take it from there. All right. So it's a little blurry. All right. So anyway, let's see. Let it readjust. There we go. All right. So how to avoid taxes legally. So as a real estate investor, you bring in money in let me take a step back. So I used to bring in money through my W-2. So on your 1040, this is your 1040, right? And this is how you pay your taxes at the end of the year. And on your 1040, you have what most people have is their W-2 income. Then you have your interest income. You have your dividends. Then you can have your stocks. On top of that, you have your rental income. So it's probably really small to read. So on YouTube, you'll be able to see it a lot better. It's a lot larger. But I'm going to write it a little bit bigger. So right now, what I want to focus on, though, is just two types of income. W-2 income and then rental income. So in the tax code, there's something that's really special about rental property and real estate investing. Is with rental income right here, it's a separate sheet. It's your Schedule E on your taxes. So what happens is the money you make here will go onto this line item of your of your 1040, and your W-2 income will go on this line item. And they're going to take this money plus this money. You get a total, and this total you're going to pay tax on it. Okay? Now, let's just say you had rental income, but the total was not a positive number. It was a negative number. This negative number would go and reduce your W-2 income, so actually you would pay lower taxes. So you're going to say, well, if I have a negative income, I lost money in rental property. So how is that helping me make more money if I just lost money on my rental property? Well, the great thing about real estate is that there's so many tax benefits by being an investor. So you can actually make money, but on your taxes, it looks like you lost money. So you have your rental income, right? And then you have your expenses. So income minus expenses, let's just say you are positive, right? You're positive. But you have this thing in rental income, it's called depreciation. So this depreciation basically says that the building that you own went down in value. It's worth less because it's older. Now in reality, your property didn't depreciate. Your property actually went up in value. But for tax purposes, you're allowed to depreciate the property because it's now older. So now you're depreciating the property. This is a negative number. This is a negative number on paper, but in reality, you didn't lose anything. This is a paper loss, and it can actually show you as a loss overall, a negative number overall. So you take this negative number Well, you actually didn't lose money. You actually made money. This now negative number counts against your W-2 income, which lowers your taxes. So a lot of wealthy people, they will end up investing in real estate, not even to make money. They'll just do it to save on their taxes. So they'll just start buying lots of real estate to save money on their taxes. So sometimes you'll see these deals, and I would see these deals. I'm like, man, I can do the smaller deal and make 10% on my money, but this larger deal is only 5%. Why would anybody do that? I'm thinking these rich people, they have to be smart because they're rich. Why would they do a 5% deal? I later realized they're doing these 5% deals because it's one, they need to buy big deals to get big tax write-offs. Two, because of how large their tax write-off is, that real estate deal is actually making them more than 5% when they account for the taxes they're saving. So in reality, they end up making a lot more money when they add back for taxes. This is another strategy when you hit another level. But right now, even me, when I was 19 buying my deals, I was able to save me a ton of money in taxes. And I don't think I've paid taxes in the last 15 years, meaning income tax. All right. Well, I hope that gives you an idea about how a small idea of how the tax system works and the overall strategy as a real estate investor. Now, anyone that has any questions regarding this, please send me messages. And if you have any questions regarding credit and how everyone's credit score just got dropped around 25, 30 points, also feel free to send questions regarding that. All right, so 1% says personal finance is only a small percent of self-development, though. I agree, it is only a small percent, right? I think there's 5 pillars to your life: spiritually, physically, mentally, emotionally, financially. Okay? If any of these are off, you're going to feel like something is missing in your life. Okay? The thing is this: what I found, if you have your finances in order, you have a lot of time to work on those other items. Number one reason for divorce: financial problems in a household. Your relationships are going to be a lot better if you have your finances in order. So just keep that in mind, that yes, finances aren't everything, but they are very important. How much can you depreciate of the building value every year? So in a residential, so 4 units or less, you can do it over 27 and a half years. So it's the amount, the property divided by 27.5. In a commercial deal, it's divided by 40. But you can go into a more aggressive depreciation model if you get an engineer to do a cost segregation model on your building. So sometimes you can depreciate 30% of the building year one. So again, you put in $200,000 into $1 million deal. You put $200,000 of your own money, but you could hypothetically depreciate the property $330,000 more than the amount of money you put in. So if you have a high tax bill, you have a $600,000 tax bill, you can write off $330,000 of your income, of your earned income, and get a huge tax savings. Roughly, you would save about $110,000 on that move. So yeah, you spent $200, but you already saved $110 just on your taxes. You made 55% return just on your taxes. It's really great. All right. All right. Okay, let's see here. Go back to the questions. So, master the craft. Yes, master the craft. All right. So, you have a company that provides property loans? If so, what are the general requirements to obtain? So, most of the loans we're doing now are like commercial style loans or hard money loans. So, you're just going to flip a property. We do not do like FHA loans or standard Fannie or Freddie loans yet. We're in the process of offering that as well. So it depends on what your needs are. You're going to have a, owner occupied property, a long-term rental, or a flip. And then there are different loans for each. Your loan is just a tool, and you need to make sure you're using the right tool for your objective on the property. Don't use debt, bro. Everyone thinks debt is an asset. It isn't. Debt is debt. Even property loans. That is incorrect. Most wealthy people in the world use debt, and debt is a tool. So you use debt to help you grow. You can use debt the wrong way, or you can use the right way. It's kind of like people used to say fat is bad. Fat is not bad. Avocados are very good for you. Avocado is almost all fat, but that is good fat. There is good fat and bad fat. There is good debt and bad debt. So debt is helpful if used properly. All right. So Freeway says, sounds illegal. It's actually not illegal. It's part of the tax code, and it's used by all levels of investors and mostly used by the super rich because they're trying to do everything possible. Like he is doing better than you. I'm doing pretty good. Yeah, I'm doing very comfortable. What is the age of the building? The age of the building actually doesn't matter. You can buy a brand new building and depreciate 33% year one, if you have the proper cost segregation model. Dr. G says those offshore accounts. No, you do not need to use any offshore accounts for this strategy. All right. Emilio CPA, what do you think about investing into opportunity tax zones? So Emilio CPA, if you think anything I said was wrong, please blast me in the comment section that I'm wrong. But I know I'm not wrong because I'm also an accountant. So I know these rules. So what Emilio CPA is talking about now, he says, tell me about opportunity tax zones. So there was this great thing that came out, and it's talking about opportunity zones. Opportunity zones are areas usually that are lower income, that need assistance to grow the economy in that area, and there's major tax credits for that. In an opportunity zone, if you open up an opportunity fund and you purchase a property or a business in that zone, when you sell it in 10 years, the business or the building, you pay no tax on the gain. Let me repeat that. You can buy a business or even start a brand new business in an opportunity zone. Grow that business to say be worth $10 million. When you sell the business in 10 years, you would pay no tax on that business. So opportunity zones for investment properties. This one takes a little bit more detail. If you're buying a property in an opportunity zone, and it must be purchased within an opportunity fund, not that hard to do if you have the proper accountant to set it up. You buy the building for $1 million. The rule is that you must spend an additional $1 million on that property within 30 months of purchase. Okay? 30 months of purchase, you must spend 100% of the cost of the property. The easiest way to do it normally is when you're building a brand new building from scratch. I did run some scenarios where I found properties where I could just buy the property, do upgrades on 80% of the property, and then just spend the rest of the money on the extra land to build an additional building, where then I would meet the requirements and the return on investment was a lot better. So I think opportunity zones are good, but never make decisions just on tax reasons. You want to make sure that you're buying a good asset, and the savings in tax is just an extra. The most important thing is buying a good property at a good price. Never overpay just because you feel like you need to get your money at work. Never buy a property just because you're trying to save money on taxes. Because if you buy the wrong property, it can cause you so much headache that it will drain your energy and your time from investing in anything else. So I bought a property in that same scenario back in 2008. And that property for 3 years drained my time, drained my energy, took my focus away from other things that would make me more money. Did I end up making money on that property? Yes. Could I have made more money elsewhere? Yes. So what I would say is, be focused and more on making a better return than to save money on taxes. Okay. Can you save this live? Yes, I can. It's going to be saved on YouTube at 10 a.m. tomorrow morning. If anyone wants to follow me on YouTube, it is Pascal at Pascal Corcus. So it's the same thing as IG, except the same name on YouTube. A lot more content on there, a lot more information, a lot of good stuff out there. So if you're really trying to take yourself to the next level, go watch all those videos. You're going to learn a lot. And also, you know how it's backwards here on IG? On YouTube, it's not backwards. You can see everything properly. Lucy says, hey, Pascal, I left work early to make it on time and keep learning the good stuff. Nice to see you. Nice to see you too. I got some dedicated people here. Bought the course, constantly ask questions, join the live. If you keep on studying, you're going to be able to make it. I started studying when I was 14. I was able to buy my first deal at 19. But once I bought my first deal, I basically bought back to back again and again. Every year or every 6 months, another deal. So by the time I was 23, I was able to have 23 units. So stay focused. Initially, it's just overwhelming because you're not taught this in school. You're not taught this anywhere, to be honest. I went to college. I have a finance degree, minor in mathematics, second degree in accounting, minor in economics and international business. I took over 200 credit hours worth of classes. That's enough to get a doctorate degree. And they don't teach us stuff. Basically, what I learned in college, and people ask me, they're like, should I go to college? I say no. Unless you're going to need the degree, I would say it's not worth it. You want to go be a doctor? Yeah, you need to go to college. You want to be an architect? Yeah, you have to go to college. But in reality, most of the real things you learn, what I learned in college was just the definitions. Like I can say, oh, okay, that right there is cost segregation, or that right there is soldiering. But how do I apply this information? What do you learn how to use it? That's in the real world. And that's going to take you, getting pushed around, falling, making mistakes and getting back up. Because you can study basketball all you want from the videos until you put your hand on a ball and until someone like pushes you while you're trying to make a shot, you're not going to be able to make a good shot. You have to be able to build up the calluses. You have to build up your strength because this sport is a fun sport. It's a lot of fun, but it gets really tough at times. So you have to build up that thick skin. Hey, when is your live IG started? What time and day? Thank you. So it's every Wednesday and every Sunday at 10 p.m. Eastern time. I go live. Shakri says, I understand a rich person like a doctor can write off taxes in his rental. So if you have a 9-to-5, doesn't pay much, but if you many rental properties, how can you save on taxes? So even when I was making $24,000 a year, I was able to depreciate my properties just enough that I'd write down my taxes, and any money that I paid in, I would get right back. So you're going to be paying in every week towards income tax. So you might think, okay, at the end of the year, I broke even. I don't have to pay any taxes. So Pascal, why would I depreciate a property if my tax return already says I don't owe anything? The point is that say you paid in $4,000 into the government through your income taxes, and then you depreciate your piece of real estate, so you show a loss. The government will give you back that $4,000 if you have a big enough loss. Black Beauty says, can you go into detail regarding credit score? So currently, your credit scores have been readjusted. The credit bureau, every time there's a recession, they seem to change the way they assess credit scores. And normally, when they change the way they assess credit scores, that lowers most Americans' credit score. So most Americans have saw a 25 to 30 point drop on their credit score in the last week. Also, many people have, sent me messages on TikTok and IG saying, "Hey, my credit score, not only my credit score dropped, the credit card company cut my credit limit, which is the credit card company cut my credit limit." When they cut your credit limit, say you have a $10,000 limit, say you have a $10,000 credit limit, okay? One of the largest factors is utilization. So when you utilize a credit card, say you're using $3K out of a $10,000 limit. That's a 30% utilization. Well, now they don't want you to even have 30. They want you down to be at like 20% utilization. So 30% used to be good. Now 20% is good. So if you're using 30, you're already above how much they want. So they're dropping your score. Second thing that happened, credit card companies cut the credit limit, and now they're cutting you down to say like half the limit, $5,000 limits. This is gone. So before you used to be at 30% utilization, and that was good. Now they want you to be at 20% utilization, and the credit card companies cut your limit. So now you're at 60% utilization. That will take a major hit to your credit score. Double whammy. One, they want even lower utilization than before. Two, credit card companies are not cutting limits. This is making a big effect to people's credit. So the amount of people, what I see is going to happen is the amount of people that are going to be available, the amount of people that are able to purchase properties coming next year will be less. Higher supply and reduced number of qualified buyers is going to cause pricing to drop. So I think it's going to be a great buying opportunity next year. Just make sure we're all ready. Chuck says, "Keep it up, man. The world needs more people like you." Thanks, Chuck. Garcia says, "What is a good way to raise enough capital to start investing in property?" So number one thing is you need to look at your spending, because I was able to save $32,000 making $8 to $12 an hour. Now, I do know it is tough to save money. It was very, very tough. So in addition to that, once you have some money saved, you need to reinvest it, either in stocks. You need to buy and sell. Like I used to collect coins, Pokemon cards, comic books. I found some of my old Pokemon cards from like 98. So there's some good collectibles there. Again, I used to buy and sell stocks. It really depends what's your thing, because you could really buy and sell anything. One of the things I probably would go into is cars, buying and sell used cars. You can buy like a nice older Toyota or Honda for like $6,000, fix it up, clean it up, and resell it for $8,000 to $9,000. So build up the skills to buy and sell, because eventually when you're going to talk to buyers to buy their property, you're going to want to have that good skill of being able to talk to people and to get them to sell it to you before it goes on the MLS so you can get a discount. Curly says, what do you do if you don't get approved for a loan because of your debt to income ratio? So what do you do if you're not approved for a loan based off of your debt to income ratio? So there could be many things you could do. So it's called your DTI. So your DTI is your debt divided by your income. So step one is increase your income. That'll make this percentage lower, because you want your percentage to be low. Okay? Now, that's hard to do, right? Making more money. That's something that's hard to do. So another option, it's a little better. Another option is reducing your debts. Okay? So now you're like, well, Pascal, how am I going to reduce my debts? The point is, you don't have to actually reduce your debt. You just have to reduce the monthly payment of your debt. So one example is by lowering your car payment. So how do you do that? So say you have, because your debt is all of because your car monthly payment plus your mortgage plus your credit cards. So if you have very low credit card balances, you can just pay them off. They'll remove some of your monthly payments. Say you have a car loan and your car loan has 2 years, maybe 3 years left on it, okay? If you do then refinance your car loan to another 5-year or 6-year loan, it's going to lower your car payment in half. So say you have a $800 car payment. That's really going to screw up your debt to income. But you have 3 years left. You can refinance that to another 6-year loan and lower your car payment from $800 a month to $400 a month. So that alone, right, plus your mortgage, let's say it's $1,500, plus your credit card, which was say $200, now it's $100. The difference is about $500 a month in this example. I lowered my car payment in half because I refinanced it and got a lower payment, and I lowered my credit card bills because I had a couple of small ones. I just paid them off to lower my bill. I'll give you another hack. If you pay your credit card payment, let's just say your credit card statement is printed on the 18th. Pay your bill on the 15th before it's printed. This way, it will automatically reduce how much is owed because they look at your credit card statement the day it's printed. So if you print it a few days earlier, they don't know how much you spent, which would then lower your monthly payment on your credit card. And when you lower your monthly payment on your credit card, it'll lower it from say $200 a month to $100 a month, which would then reduces your monthly debt. So this now reduces your monthly debt to $500 a month, right? It reduced it by $500. Now that's risk reduction by $500. Let's just say you had $5,000 of income in a month. Well, you just gave yourself an additional 10% in your debt to income ratio. You now have 10% more in your debt to income ratio. And if you didn't know, $500 a month is roughly $100,000 in purchasing power for a property. So what does that mean? That means let's just say you don't have a debt to income ratio problem. But let's just say you're trying to buy a big property. Instead of buying a 2-unit property, you want to buy a 4-unit property. Well, if you use all these tricks I just told you, you can open up $500 extra a month in the ability to get your loan ability has increased by $500 a month. You now can buy a property for $100,000 more than you could the month previous. That's by refinancing your car loan and paying your credit card bills prior to the statement date. All right. Go. What's up, Rockstar? What's up, CT? What's up, Lit? What's up, Jez? Freeway. Solo. I'm assuming you're in the US. Rules could be different in other countries. What's up, Brazil? All right. What's up, guys? All right, guys. Send in your questions. I'll be happy to answer them. All right. So the question is, does the clock restart every time a new buyer gets the building, or it's from the year the building was built? No. Every time a buyer buys the building, the depreciation restarts. So let's just say you bought the property for $500,000. Let's just say you bought the property for $500,000. You get to depreciate it at $500,000. Later, you sell the property for $1 million. The new buyer gets to depreciate it off of $1 million. This is one of the reasons I don't ever think real estate's gonna go down in value in the long run. Next year, should it go down? Yes, but it's gonna go down temporarily. I think in the long run, it's always gonna go higher because there's always gonna be more and more people buying property to roll over their money to avoid taxes and to get larger and larger properties for depreciation. So I think that we're gonna consistently see this. What do you do? I have a real estate investment company. I have a property management company, construction. We do taxes, bookkeeping, payroll, home insurance, auto insurance. We do lending. I mean, we do it all. Can you talk about wholesaling? Sure. With wholesaling, basically, you're finding people that want to sell their property. You're putting the property under contract. You find someone like myself that's interested in buying properties. You show me a property that is a good deal. And I can realize on paper, look, this looks like a great deal. I then purchase the property from you. I'm buying the contract from you. So then you say you have the property under contract for $200,000 and you sell it to me for $210,000. At the closing table, I pay $210,000. $200,000 goes to the actual owner, the person selling the property, and $10,000 goes to you. What's the best advice for a first-time buyer? Know your market, buy in a good area, because location is always true, and understand what the value of the property is. Don't overpay. All right, so Lucy says the credit card payment, they look at the minimum payment. That is correct. When they're looking at and assessing your credit card payment, they're looking at your minimum payment. Daniel says, shoot, about to miss this important video. Don't worry, tomorrow, 10 a.m., the video will be back up. We went over a lot of good stuff today. All right, and Daniel says, so Daniel says, if I can't find good properties in your area, what should I do? So one, I think there's going to be a lot of good deals next year. So don't rush it. There's going to be a lot of opportunity next year. So I'm being patient and I am saving my money. I have a lot of money saved up, ready to buy some good deals. Sorview says, why are you not answering my question? I don't know what your question is, so resubmit it and I'll answer it. Do you like note deals? It depends if the deal is good. Is it worth to get a loan for a property that you want to use as a rental property? Say if it's for 10 years, do you rent it out for more than the mortgage to make money? So normally you would get a rental property loan for 30 years. You want to make your loan as low as possible so you can make a large spread between how much rent you're collecting minus the mortgage, taxes, insurance, and payments. The bigger the spread, the more profit you're making. So you want to get a 30-year mortgage. Plus, if someone is not in the property, you don't want to be stuck paying out of your pocket a big monthly payment. If you buy a 4-unit property, you'll avoid that issue because if one person leaves out of the 4, you're still making enough money and you're probably still making a profit. He says, I got a question, big bro. I recently got pre-approved for a new investment purchase, but then I got out on furlough, collecting unemployment. Am I still considered to be able to buy? Currently under furlough, you might not be able to buy. The point is, though, if you are on furlough and you're buying the property only for investment purposes, you could probably still qualify for the loan. Because when you're buying an investment property as an investment property, you're not telling the bank you're going to move in. You're just saying, hey, bank, I'm buying this investment property. I will not be living in it. And they're going to say, okay, that's fine. Put down 20%. They're going to assess the income to expenses. And if you're buying a good investment property that's making money, the bank will still give you a loan. They don't care if you're out of work or not because they know the property is making money. That's what matters. So part two, I think there's going to be a lot of good deals next year. So unless you're getting this property for like 30% off of what retail price would be for this property, it's not worth it. I'm not saying if the property is worth $1 million, you get it for 700, and the reason you got it for 700 is because it needs $300,000 worth of work. No, that's not a good deal. I'm saying if the property is worth, it used to sell for $1 million, and now you just happen to convince the seller to give it to you at 700, then buy the property. Otherwise, I don't think it's worth it. I think you'll be able to get better deals next year. All right. So remember, guys, whoever asked to go live, I answered those questions first. Second, I answered the questions in the DM. And then third, in the question section. And then third, I answered the questions in the DM. What if you have a 9-to-5 and you're into wholesaling real estate? Is that a good way to start? Yes, wholesaling real estate is a good way to start. Anyone that finds a good deal in my market, I'll be more than happy to buy it. And I'm happy to pay them for the time they took to find it. How good are you at real estate? Are you gay? So am I good at real estate? I'm very good. Am I gay? No, I'm not gay. All right. Hey, Pascal, love to listen to you. Great stuff. What are the key factors into getting into a multifamily house and any strategy in finding the right contractor for rehab? So the biggest strategy is literally going out and meeting people and getting references from people you know. It is very easy for anyone to say that they're good. You need to go get references. 2, anyone that's good is going to be very hard to get a hold of. So just make sure whatever you're doing, you're going to have time for them to come in and do the work. Normally they're super busy. Now, I would say to get into multi-units, studying your market, because the biggest reason most people fail is they overpay. The biggest reason why most Airbnbs fail is because they overpaid. Airbnb is a good business. Multifamily is a good business. But why did people fail in 2008? They overpaid. I had a friend, he had 8 homes, and he paid about $300,000 to $400,000 on each home, and he said he was renting them out. I ran the numbers in my head. Like at this time, I'm like 20 years old. I ran the numbers in my head, and I was like, I don't know how you're doing it. I literally don't know how you're doing it because the numbers don't make any sense. The reason was they were getting what we call today toxic loans, which is negative AM loans. That means the interest rate that they're paying per month is lower than the actual interest rate accrued. So the mortgage value is getting bigger every single month. Their loan was getting bigger. And they were hoping that they can sell the property in the future for more money, even faster than what the loan was growing at. So, and what happened is eventually the game stopped. 2008 hit, property value stopped going up, and he lost all those homes. So it really sucked. Can I refinance multiple properties with the current rates with 2 different lenders? Yes. Not the same property. It would have to be 2 separate properties with 2 separate lenders. All right. I found a duplex. It's in a bad shape. What is the best way to know if it's fixable and if I'm able to get permits to fix before buying it? So get a general contractor to come check out the property before you buy it. Simple. NOI and cap rate. So NOI and cap rate are very similar. cap rate. Okay? Cap rate is net income over cost. The net income for the year, ignoring the loan, over the cost of the property. So if you're making $50,000 and you bought the property for $1 million, before the mortgage is accounted for, this is a 5 cap property. That's what cap rate is. Okay? Net, put this in it. I'm blue. Net operating good catch. All right. Net op income. So net operating income. That is the net income that is the net income after loan payment. Net operating income is the net income after your loan payment. This is a percentage. Cap rate's a percentage. Net operating income is a net income after loan payment. So you take your net income after loan payment, you divide that over cash that you spent on this deal. How much cash did you put into this deal? And that gives you cash on cash return, which is another percentage. So how I look at things is I don't really look at the cap rate. Some people would say, oh my God, that's a 5 cap property. It's a 4 cap property. It's not worth buying. In my opinion, or in this last deal that I did, I bought a 0 cap property. Technically, it was not a 0. It was a negative cap property. That means I bought it and it was losing money every month. So you'd say, Pascal, why would you buy a property that's losing money? Anyone have any ideas why I would buy a property that's losing money? Any ideas? No, not tax write-offs. Good idea though. It was a deal and needed work to rehab it and add value. Going to add value to build up on it. So was there tax write-offs? Yes. But the main strategy was to purchase it and rehab the property. So I purchased the property with a negative cap rate. I added value to the property. I spent money on the property. Then when I was finished, it made a lot more money, right? It went from making, it should have made with around $6,000 a month. By the time I was done with my rehab, it's making around $23,000 a month. So $23,000 a month times 12, it's bringing in roughly $270,000 a year. The net amount of that is around like $120,000 a year profit, like to my pocket. Divide that over the cost of the rehab, which is around like $900,000. So it became like 15% return, cash on cash return. I'm then going to be doing a cash out refinance, getting all my money back out of the deal, and still making, after I do that, probably around like $8,000 a month. So I'll have no money in the deal, and I'll be making $8,000 a month. So at that point, let's just say even if I had $100,000 in the deal, I would be making around 50% cash on cash return. So that's my strategy. Is basically try to buy properties in amazing areas that aren't going to have much headache from tenants, and from there rehab the property. So the BRRRR method for apartment complexes: buy, remodel, rent, refinance, repeat. Now, all that sounds great, but to be honest, it takes a lot of skills. You have to be able to negotiate the deal, able to find a deal, negotiate the deal, find people to do the work, rent the property out, and then refinance it, get all the financials in order. So it does take time. I've been spending basically my whole life learning how to do all these different skills, but the benefit is once you have these skills, you're going to be making a lot of money. Would you ever buy outside of Tampa Bay, Florida? Would I? Yes. Do I think I'll do that anytime soon? No. Just because there's just too many good deals in the area. Would you kindly send me an example of the wholesaling contract that you have used? I've never done any wholesale contracting myself. I don't wholesale contracts. I always keep them myself. If it's a good deal, it's usually, for me personally, not worth wholesaling it. I'd rather just keep it and do the work of rehabbing it, Fredos, real talk with great strategic information, Pascal. Thanks. Francisco says, what do you think about buying here in California? Personally, I would never do it, or not never do it, but it's extremely rare that I would buy in California. It's just not worth it. I mean, in my opinion, to be honest, it's just really not worth it. The return on investment's not good. If you have to evict a tenant, they're in there for 12 months without payments. It's just a lot of headache. What's the best floor for a B to C class residential rental? 2.2, 3.2. So Freeway, I keep on trying to add you, but for some reason it's just not working. Brenda says, is it a bad idea to pull out money from the equity I have in my house to purchase another property? No, I don't think it's a bad idea. I do that all the time. I would say probably pull out the money and then do a refinance, pull out that money. Then for the remaining 20% equity, get a home equity line of credit and have it sitting there. So the second the market falls, you can pull all that money out, sit on the cash, and be ready to buy another deal when it comes. The big money is made during these hard economic times. Hard times are coming. We're going to have a major correction. There's going to be, I learned when I was younger at the bank, I met a guy and he was worth a lot of money. He was worth hundreds of millions of dollars. And he said, the money is made when the blood is in the streets. And I'm like, what do you mean? He's like, during deep turmoil, economics, health, social issues, it's a good time to buy in that area because people are selling things very cheap. He said in South America, there was times where there would be these radical groups and gangs would go and shoot up cities. And then Hilton went and sold one of their hotels that was worth $10 million for $1 million. And his group bought one of the hotels. He said 2 years later, everyone forgot everything that happened and we resold the hotel for $10 million. So that sounds like a good return on investment for me. What you have to do is you have to have a strong gut. You have to have money ready to pull the trigger on the deal. And you have to have faith. So one thing I have a lot of faith. When I find a deal and I love the deal, right? I am faithful that it's going to work out. So I execute on my strategy. Have you heard any about the Virginia area, and is it worth it? There's people who are buying in Virginia. I think there's going to be some retired people that are going to buy in Virginia. Just make sure you're buying in like downtown core areas because there's going to be a demand for that. What other areas are you seeing booming outside of Tampa? I mean, Orlando seems like a good market. Arizona seems like a good market. Texas seems like a good market. Any of the areas that are, any of the states that don't have a income tax is going to be good. We're going to have what's called a silver tsunami coming, and it's actually going into effect right now. 10,000 people are turning 65 years old a day in America, and that's a trend that's going to continue for the next 15 years. So we have a lot of people that are turning 65, that are going to retire, and when they're taking money out of their retirement account, they're going to want to move in an area where they can save on that tax. So imagine like you're living in New Jersey or some other state and you have like 5 to 10% in state tax. If you move to an area where the properties cost less, where the property taxes are less, and you have income tax, your money goes a lot further. Any advice to do so? What state would you recommend? Florida, Texas, Arizona. So, Brett, is it better to buy a fourplex in a bad neighborhood or a duplex in a good neighborhood for 3 times the price? You know, a bad neighborhood is going to cost you a lot of time, a lot of damage, a lot of headache. So I would say never buy in a bad neighborhood. You can buy in an up and coming neighborhood. You can buy in a blue collar neighborhood. You don't have to buy in a high end area. But if you buy in a bad neighborhood, it's going to cost you so much time, energy, aggravation. It's just if you're not the right type of player, it's not always a good idea. What's your advice of wholesaling properties in a small town? It might be more difficult because wholesaling requires you to have buyers and sellers. Okay. So if you don't have a buyer, you can't really wholesale the deal. So the good thing about wholesaling, though, is that it's not going to be a problem if you can't close because you're not really giving them any money. What's your opinion about co-investing as a beginner? I mean, that's fine. The biggest thing people are going to want you to do is find a deal. So if you co-invest with somebody, normally they're going to want you to find a deal. Otherwise, you're going to have money. So either you're going to have money or you're going to have supply the deal. Kevo says, your knowledge is appreciated, Pascal. You're welcome, Kev. So why Ohio properties are so cheap? Is it worth to buy and rent it out? The thing is you need to look to see has the area been decreasing has the number of people in the area been decreasing over the years instead of increasing? Normally what you want to see is you want to see the area population grow. You want to see population growth. If you see the population decrease year over year, and their 5 and 10-year outlook is a decrease, normally you're going to see property values go down. So you're not going to see property values go up, you're going to see property values go down. And most of the money you make is in the wealth creation. So if you're going to see property values go down, normally it's not a good area to buy in because, again, that's where all your wealth creation is the asset value going up. So in my opinion, it's not really worth it. Now, if you're wealthy and you're just looking at a ton of money coming in from rental income, or if you can buy it at a really, really low amount of money and you're getting a ton of money in rental income coming in, maybe that's your strategy, to just have a whole bunch of cash coming in, and that's your style. But otherwise, I don't think it's Again, it's not really my style. I want to see the asset value go up. All right, guys, it's been an hour. It is 11:15 my time. It was really great. So I'll be live again Sunday at 10 p.m. Eastern time. On my IG and in my YouTube, you will find a link to my class, Foundations of Personal Finance. It'll teach you about credit, finding a deal, financing a deal, tax returns, loan options, and the way an intelligent investor thinks. Every week, I'm adding more content to the class. Check the link in the bio, pick it up. It's really important to learn now because, for example, if you want to buy a deal in a year, you can't start in a year. It takes months to fix certain things in your foundational financial position to be ready for you to pull the trigger on a deal. So if you don't start ahead of time, when those deals come available, you won't be ready to pull the trigger and buy the properties. So you need to prepare now because some of the issues you might be on you might have tax return issues. Those things take a year to 2 years to fix. So the sooner you start, the better you'll be. God bless you guys. I wish you all the best. I hope you all stay healthy and your family stay healthy as well. And I'll see you guys next time.